Welcome, everyone. Welcome to another live show. We are live here from the MooMoo Singapore office. I'm your host, Olivia Higgins. Now, today is the third show of the MooFest 2023 series. And this part is the online series as we gear up for the main event happening very soon. We'll share more details at the end. Now, today, I'd like to remind you that it's all about learning, okay? So take this as an educational opportunity for yourselves. Connect, network with the people down in the chat box, whether you're tuning in app or on the YouTube channel. Okay, everyone? So thank you so much for coming in. And here we go with the chat box questions. I'll pick out the best questions before we go into the giveaway challenges. But I think today is really important that you keep yourselves engaged within the discussion and the topic for today. Welcome, everyone. Okay, I see some people dropping in as well. Welcome to the show. So as mentioned in the previous webinars, we'd like you to really take charge for the rest of the year. And so these series are really put together so that you can rethink your portfolio and look at the potential strategies and opportunities that are available for you out there. Okay, so today's topic, let's jump straight in. The primary question for today is really about the debt ceiling and how we can actually leverage on the potential opportunities as we proceed on. But today, it's talking about the context of now and also the Singapore market outlook for 2023. So today with me, let us welcome from Fullerton Fund Management, Director of Business Development, Intermediary Sales, Sam Ye. Hi, Sam.
Hi, Olivia. Hi, fellow MooMoo investors. Good to see all of you. Thank you.
Welcome back to the show, Sam. Now, I know that people are familiar with you on the show, giving your expert analysis. But for those who are new to you being on the live show, tell us a bit about yourself and also why is it important that they listen to today's show?
Okay, I think I come in handy, and the bloodbath on the overnight market has actually given us a lot to think about. Our portfolio. How do we protect the downside? I think today's topic is on cash. It comes in very handy. Both the Asian markets as well as the US equity markets has fallen significantly after yesterday's jobs numbers, and there's also a signal to raise interest rate further after a big pause. So here comes July. Independence Day has been over. So I think politicians all over the world making friends over here to also make friends with fellow investors and also provide an insight. How do you defend your portfolio carefully using cash?
Absolutely. And you set the context. You're talking about July. I mean, we have 4th of July. We're looking at the revelations of the US market. But how does that relate back to the active investors within Singapore? So my question for you to start off our chat over here is really about the topic, right? So life after debt ceiling. Let's start with that particular part of the question for today. Now, where are we right now? And what should we be looking out for before we go into the Singapore market outlook?
Okay, I think a very valid question about life after debt ceiling. If I'm answering from a political standpoint, that probably would be my last debt ceiling race. But the new successor probably will have other thoughts. Azan saw how many times of debt ceiling increasing over the last decades. It has only been one direction, higher and higher, which means that inflation is definitely there to stay. I think our money is worth lesser. Wiser investors will probably want to grow that pot of cash. So I think I probably like all the investors to have cash at any one point, whether is it a bear market like right now. I think it's quite bearish. Hopefully the recession is not going to hit us with our jobs, but definitely having cash will allows you and grants you an opportunity when the peaks are there. We're thinking about the US dollar peaks. We're talking about inflation peak. We're talking about the risk peak. When this 3Ps has already been reached, we think that this year will be the year that this 3Ps will be attained. Cash will be very useful for you. You're buying market at super cheap price. So I think let us talk about the topic today. After debt ceiling.
Thank you for setting that intro and the context of where we are now. Now, just the next question before we have some insights that you'd like to share. The recent Fed announcement and going forward to the next one, there are different schools of thought out there on the investment communities. Now, from your perspective and also Fullerton, what would you say is that immediate strategy to move forward from these announcements?
Okay, I think I can't probably speak on the US dollar perspective, but I will probably relates to Sing dollar. I think the Sing dollar is following very closely behind the leader, which is the US dollar, where the interest rate is going to be is the next FOMC going to post a 0.25 or 0.5 increase in terms of the rates. I think this is all very possible after yesterday's job numbers. I think members will have also accepted the fact inflation is sticky. People are struggling with their daily life. Their role is to make sure there's a harmony between jobs as well as inflation. So I think that is the primary concern of the FOMC members. So Sing dollar as well. I think the rates is going definitely got higher. We can actually already seen, I think the last T-bill issuance by the government of Singapore is very high. It's almost like 390. So I think that already set the stage that interest is going to stay high for US dollar, particularly very correlated to Sing dollar. We should end the year higher than 2022. The where our rates are should be higher than 2022. And from there onwards, 2024, when things is settling down, no economy will want overheated high rates, and that will set the stage of a declining rates from 2024 onwards.
Right. Thank you for that. So coming back to Singapore then, especially for the investors that just tuned in as well, coming in from a perspective of investing in Asia Pacific and also Singapore market, we are looking at what are the potential opportunities in this space as we go forward, based on the context that you just set for us on what's happening with the US and globally. So what are your thoughts on this?
I think the market looks very attractive right now, especially the developed world equities. They look very attractive to me. But of course, I would like to probably highlight again, make hay while the sun shines. We don't have this kind of opportunity. Probably I'll say once in a lifetime opportunity to see high rates. The last time when the rates was as high as right now, I wasn't in the industry. Probably I wasn't even born. It was probably in the 70s or very early of the 80s. Today we are back to where we are, where Sing dollar rates could be as high as 4. Sometimes if you're lucky with T-bills, they may even get a 4.2, 4.3. So I think this is the time where investors probably want to do some barbelling, tiptoes into the equity markets, which is already cheap. Global equity looks fine to me in terms of valuation. They're extremely valuable. They are not expensive at all. I think this is one. If for risk taker, they can probably want to do that. There's thousands of instruments on your MooMoo apps. I can see so many of them, quality products. I can reference to that. But there is only a couple of strong money markets instrument out there. As investors in Singapore, myself included, knock on the banks, see if they can give you some good rates. If they can't, we are also spoiled with good opportunity. Can buy a T-bills from the government. If you're an institution investor, you probably can look for MAS bills. Else, otherwise, you want to have a mix of an institutional view as well as some deposit views. I think Fullerton has a cash fund, which is highly applicable to retail investors. You're getting a very institutional-like kind of yield structure. Today, we're above the 4% handle for you to look into. And this also daily liquidity. So there's a lot of opportunity. Do the barbelling, very low risk on cash, and as well as trying your luck, as well as your investment manifesto on global equities. This will balance your portfolio very well. Yeah.
Thank you for that. So I've got the next question related to the market. So, depending on where it goes in the next 6 months or so, what would you say that that key point you brought out on cash, right? How does that come into play and help one leverage against the potential risks that we're about to face?
Okay, I think this is timely, and it also grants investor an excellent opportunity for the next 6 months.
Mm-hmm.
I think the Sing dollar rates will remains elevated. We
Mm-hmm.
do not foresee that Sing dollar rates, like I mentioned, a cash run rate of 4%, suddenly 6 months later we're at 2%. That situation, I think, is very remote. I don't think it's going to happen anytime soon. So while waiting for any opportunity, if you see an overnight, like last night is a good example, fundamentals are still strong. Earnings of the companies are not lousy, yet the market has fallen because of fear. This cash can be transposed into an equity exposure. So it kind of balance your book during periods like right now. I think this is a very excellent opportunity for you to look into. And I think also staying to Sing dollar will give us a great opportunity to diversify us away from a potential rate cut in 2024, where US dollar starts to slide downwards against the peers. I
Mm-hmm.
think Sing dollar will remain strong, particularly in ASEAN, which many of our trading partners use us as a hub, use us as an export center, import center, doing business here, setting up headquarters. This will allow the Sing dollar near basket to balance itself away from the US dollar into euro, sterling pound, Malaysian ringgit, or even Japanese yen and Chinese yuan. So I think all this set us in a very good position as a financial hub, earning Sing dollars, saving in it, growing that Sing dollar in very low risk environment, and having extremely high yield.
Mm-hmm.
Yeah, so
Keyword.
that's a 6 months view. Yeah.
All right. Yeah, key word you brought up that was ASEAN, and we've had this recurring theme going on even with the previous live shows, and people are interested to know, with the emerging economies within ASEAN, we're talking about our partners here, right? How does that then, like in terms of the emerging trends, right, that we're seeing right now, be it tech or even in the other industries, how then does that relate back to how the Singapore dollar will perform as an outlook for the next 6 months?
I think this is an excellent question. I think investors will be most prominent looked at in the Causeway Jam. I think over every long weekend, we do expect the Causeway to jam, don't we? Across Johor. So I think the most prominent sign to see the strength of Sing dollar, look at how long is the inwards queue towards Johor will be. So I think minimum queue today is Friday. Maybe I shouldn't take too much of the investors' time going for Johor holiday. I would say it's 2 hours. So it just simply means that against ASEAN as an economy, with the exception of Indonesia, I think Sing dollar will be the leader of the pack in terms of currency strength, as well as the economic activity using Sing dollar as a mode of exchange. I think, like I say, all the currency will remain weak. The 10 ASEAN countries, Sing dollar will probably remains very strong. And also, mark my words, it will be the new Indonesian economy, which they are very export driven, commodity driven, and the leadership of the Indonesian market has also proven itself to be one of the strongest in ASEAN. The rupiah is a good example. It has been very stable during 2023, first half of it, or even in 2022 is one of the key leader of it before having the thoughts of moving the capital away from Jakarta to Kalimantan. So I think that will actually give a view of the ASEAN market. If you don't have the appetite for emerging market currency like rupiah, I think the best bet will still be on Sing dollar.
Mm-hmm. Right. You mentioned the movement of currency as well. You're talking about going to Malaysia, coming back, and, we're looking even in Singapore with the concert boom, for example, right? Taylor Swift tickets and Coldplay as well. So that's going to drive a lot of traffic to Singapore as that concert boom actually takes place. So, how then, with the gaining traction within Singapore and potentially maybe even saturation within the industry, which I think is a good thing because there's a lot of action happening here. But then how does then Singapore position itself within the region despite the geopolitical tensions or US revelations outside of that?
Okay, I think again this is pinpointing the current situation. We have a problem. The problem statement is that the ASEAN market, Singapore remains as a hub for foreseeable years to come, from what I can see. Vietnam, Myanmar, or probably talking about even poorer places like Laos, what we do experience is a very controlled capital market where flows are not easily triggered. I want to do a set up a company in Laos, Cambodia, or probably even Myanmar. If you want to consider geopolitical tension as not as a tension, not an issue, you want to do company, capital flows will be extremely difficult. This again puts Singapore in a better position. Currency is not controlled. Uh, you can trade freely with the international currency. The stronger nations will probably face a bit of issue, is like just now I mentioned about Indonesia. People are coming Singapore to see concert, like you say. Why don't they do it in Jakarta? They have a bigger place. They only Coldplay only do it for one day. Yeah, so Singapore we have so many days. I am not a Coldplay fan, so I have no idea how many days they are coming, but definitely more than one. So I think people are coming here is also because the attractiveness and the safety of their country.
Mm-hmm.
This will translate into the strength of the currency you're holding on to,
Right.
and
Yeah.
you want to grow the strength of that currency. You want to grow that currency, not being beaten down by inflation. Money that you don't need to the nearest dollar, nearest cent, you're able to do something today. Like if you're talking about 10 years ago, we don't have a money market product.
Mm-hmm.
Uh, Only the rich people will be able to have high deposit rates. But today, I think it's easily available because of internet. People want to apply for a T-bill, they can take on their laptop. They are able to buy small amount of it. So I think this is the Singapore government or spreading what we call the common prosperity in our own way, not the
Mm-hmm.
extreme way like what the Chinese are doing. That if we are able to access that instrument, keep your Sing dollar dear to heart and grow it. If you don't want to take risk, you don't have to take risk today. So we are able to grow that Sing dollar on cash. Yeah.
Mm-hmm. Yeah, I think you brought up a really important point about Singapore. And I think the community discussions as well talk about the resilience of the economy here. But they also want to understand, and I'm getting some questions as well related to this, is, in terms of resilience, what other drivers potentially are there going forward to make sure that Singapore remains that hub, or at least that strong hub for investments?
I think that boils down to the coming election. I think should be in 2024. Singapore probably will still secure the incumbent government. Probably will still get a very good votes on the strong leadership package they have actually pushed through during COVID. Is probably a very good sign. Some may have differing views, but I think the safety of the country actually are pulling a lot of high net worth into this small little island with very little to no resource. I probably call it completely no natural resource, but human capital will be important. Headquarters across international companies coming here to set up office. I think a good example will be probably say the multinational pharmaceutical companies. They're setting up base here. This will allow Singapore to see a foreseeable future, at least for the next 5, 10 years. I think these are important because these are heavy investments. I'm factory. I'm setting up research center in Singapore. They are able to come here. They have a minimum commitment period. I think I can't see anything beyond that. This is probably too
Mm-hmm.
remote for us to make a comment. But I think in the near terms, at least for the next 5 years,
Mm-hmm.
I don't foresee a big change in terms of flows, fund flows. They're still flowing into Singapore.
Mm-hmm.
The high net worth are setting office, family office here. Corporates,
Right.
international companies coming here. So there is a minimum commitment size for them to come here for the next few generations to settle here as a new Singaporean. Again, this is an impact on the savings we are having as men on the street, investors on the street. We are having our Sing dollar. It grow together. The strength of it will grow together. We ourselves want to grow it as an amount as an investment. You can do it right now, and the openness will be important. Government
Mm-hmm.
probably will have to continue to be open and not overly shown protectionism of the country's system, allowing a more liberal, a more open-minded economy. This must be there in order for us to attract investors to come here. Yeah.
Right. That's an important point you brought up because we had that parliamentary debate week, and they were touching on also the foreign talent and access of foreign direct investment and all those issues, right, that the younger generation are very interested in. However, I think the point about the resilience and the potential drivers to keep it open, that was a really good summary for our audience to keep track of, at least if they're looking at their own portfolios. So the next question then is more on the building of one's portfolio. So the first part of the question would be, Sam, what would you say for a new investor within the Singapore market? What are some ways they can look at to build their portfolio in this space?
Okay, I think especially for Singapore investors, we are not limited to choices of investment offshore. Do not only limit to the Singapore market. I know the SDI has been very stable, but they are only led by a huge percentage by the three local banks, 40% in the three local banks. So this actually sets the stage of us having a very concentrated, if you wish to invest in the Singapore stock market, very concentrated over financials. And they're also interest rate sensitive. If interest rate have to go tighter, interest margin will have to compress. The banks may not make as much money as they should. One should diversify into the Sing dollar deposits or even T-bills. So I think that would be a good diversification from it. If you wish to remain in your Sing dollar after saying so good about Singapore, about the Singapore dollars, I think most of the investors would like to keep in Sing dollar. But also not limiting. If you want to gain exposure on the international markets like the global equity markets in Europe and US, there's always a high amount of option on the MooMoo app for you to choose a hedge share class. You can invest in Sing dollar. Remember to look for the hedge share class if you investors would like to have a Sing dollar exposure on investment. Yeah.
Right. And so part B of that would be the active investors who are already invested within Asia. I know there are a lot of the community investors that not just invest here, but they like to go outside of Singapore. But then again, with the market uncertainty, I think that's when they're looking to re-strategize at the moment. So what would you say are the fundamentals they need to know before they implement that into their portfolio as an active investor within the space?
Okay, as an active investor, I think you don't have to get a lot of fundamentals check because right now I think fundamentals, the valuations are cheap. Good companies are probably trading at 13, 14 times PE, very solid. Over time, you probably will have to, your tree probably will grow, but that requires time. So I think as a very active investor right now, always practice what we call a discipline, periodical review of your portfolio, and also have the habit of investing on the regular basis. Regular savings plan are good. You can set every week how much I want to place in it. I personally have also tried the MooMoo app. You're able to do an automated function of it. If I have to invest the first 10,000, you can break it up into 5 periods, every week putting in the 2,000 and so forth. So it creates a habit. You will never buy the market at the highest point. So while waiting, there's always a Fullerton cash fund for you to park aside. So while waiting, you're not paying to wait for the market to buy in the next round. So you're able to actually harvest a 4% yield gross your interest on the Fullerton cash fund. So always have that in mind, and I think you should be very successful. The next cycle come.
Thank you for sharing your insights on that. So maybe, Sam, you could share with us some of the components, because you already brought up the Fullerton Cash Fund. Now, what are the components of that? Maybe just give our audience a little bit more detail as to what are the components of that fund before I show them how they can access that.
Okay, certainly. So probably my colleagues from MooMoo team can recall up slide number 9, and that will give you a bird eye view of how we should look at the fund. So slide number 9, why about the SGD cash fund, why we're different. We are able to withstand a long period of drought period during 2010, 2011, 2012. Those are periods where interest rate, Sing dollar deposits are almost at zero. You go to a bank for big promotion, maximum you'll get 0.5, 0.7 tops. So this is the periods where we have not achieved a negative rate of return. In front of you are monthly numbers. None of the numbers are negative. No investors will probably suffer a loss. Even you want to go in today, want to get out next week or so forth in a month, very short period of time, you will never look into a negative return. And on slide number 10, probably you can see all these flat returns during what I mentioned, 2009 to 2012, they're over. I think in the last, I'm going to calculate based on last May to this May, you realize that in the last 1 year, an investor will have already collected risk-free. At any one point, the person will have bought during this period almost a 3.1%. So these are very high returns. These are bond-like returns, or probably like a blue chip kind of dividend payment from any stock without any downside risk. So in front of you, you can see the slide on the slide. The graph actually shows no regression. So there is no volatility on a very layman perspective. They don't really regress. There's no up and downs. You don't have to time the market because you're timing the other side. You're waiting to entry into a global equity or an equity of your choice. So during this period, while waiting, investors are being highly rewarded with cash high yield return on their deposit like funds, MMF funds like this. So what other component? Probably we'll call over to slide number 11. A very easy to understand. We are able to discover counterparties as an institution, as Fullerton. We look for counterparty. There are the banks that don't talk with the retail clients. There are institutional banks, domicile in Singapore. Good example, Qatar Bank, probably Scotia Bank, or probably Sumitomo Bank in Singapore. Those are investment bank, merchant banks, or probably I would say even corporate banks. They are able to give very high rates, and we make it simple. Place our deposits with them, create a product for retail. Retail are able to access it. That also explains why we are giving very high yield right now. The portfolio yield last read was around 401%. This on the 5th of July. I think probably we see higher rates after yesterday's T-bill announcement. That is above the 4%. So all these are adding up as a portfolio for an investors to look into. We are able to also value add based on the placement periods. Today, the shorter ends are giving very higher yield. We'll squeeze them into shorter end. Shall there be a potential for rates to go down? Well, as a fund manager, we probably will have to make an assessment. If rates are going down, we'll buy something like 8 weeks, 12 weeks, as high as say 30 weeks. We are able to do that. So I think what we're doing is to value add what an average investors cannot do. They can't roll over themselves accurately. I call myself as an example. I'm a financial practitioner for 17 years. My T-bills matured. I don't know where to put them. And I have not even known that it has matured because I think that's not my day job. So I think fund managers are being paid on a day job basis. If there is any maturity, they will be able to seamlessly roll over accurately into an instrument that pays the highest possible yield at that time. Yeah.
Thank you for sharing that. So just to wrap up before I show them how they can apply what they just learned from your side, what would you say is that summary point based on the fund alone, okay, on why they should actually, or what can they prioritize when they're deciding to subscribe to this particular fund?
Okay, I think there's no summary page. Everybody will probably be different in terms of your investment views, probably your own strategy. Some people like to time the market, which is good if you make enough assessment, if you have enough tools, enough news coverage. I think the app itself, I'm also a client of MooMoo. I think they are very prompt in terms of news of companies that has been posted very fast, very swiftly. You don't have to pay a Bloomberg subscription. You don't have to pay a Wall Street Journal subscription. You're able to get the news fast enough. So if you belong to that category of clients which want to time a company news about what Elon Musk's latest tweets, about the potential lawsuit between Facebook and Twitter, we may be able to use the fund as a parking facility. Yeah, so the Fullerton Cash Fund can be a parking facility while waiting for the news to subside. You don't want to be caught in crossfire. I think that is a very good instrument for you to avoid a crossfire. Please don't fight. We are Switzerland. We are Singapore. As Eastern Switzerland, we don't want to fight. We want to keep on the sideline. I think the
Mm-hmm.
cash funds serve that purpose. But on the other side of the some clients don't want to time the market. They want a longer term view. They probably will use the Fullerton Cash Fund because today the yield is high, especially for the next for say about 6 months. Earlier we spoke about it. You can
Mm-hmm.
rest assured the next 6 months, your money is growing at a risk-free rate of a high 3 to a 4%. So I think time to time you don't have to refresh your portfolio. Next 6 months, 1 year, is consistently being managed by 3 professional, 10 risk members. There is a Singaporean majority. I think most of them are Singaporean. The risk team, almost all of them are Singaporean. Couple of French here. Singapore managers, 3 fund managers are Singaporean. They know the Singapore landscape well. So we're able to manage that SGD. We're able to help you roll over your deposits. On daily basis, you get liquidity. Keep that 6 months, keep that 1 year. You don't want to trade, that's a very good option. You don't have to trade. If you want to trade it, it will be a parking facility. If you don't want to trade it, at least you are being swept into this auto sweep function that you're able to get 3-4%. Every $1 million, 30,000, 40,000. So I think that's good money.
Mm-hmm.
Yeah.
Thank you for that last point. I mean, I've got a lot of questions for you as well, Sam, which we'll ask afterwards. And also to our audience, we've got a giveaway challenge for you, and I'll get Sam to also interact with you on that. But before we go to that, I'm just going to quickly show you how you can access the function on your MooMoo app. Okay? So Sam, we'll see you very shortly.
Certainly. Thank you.
Okay, so you've heard the analysis, you know why you should be investing. Now I'm going to show you how you can access these funds very, very quickly so that you can apply your knowledge from today. Okay, so if you have your phone with you, I've got mine. Follow through with this demo. So what you're going to do is you're going to open your MooMoo app, click on Discover, and the first icon at the top right here, you click on Funds. I mean, some of you can alternate, you can put the funds as the top icon or below. It's really up to you. So it's based on your customization preferences. But for me, it's the third tap on the top. Click on Cash Plus. Very, very simple. And over here, you've got these 3 pillars, right? So you've got Fullerton, of course, and the others. And you've got the Smart Save function, which was added so that you can automate and you keep something more regular once you've decided to subscribe into the Cash Plus function. But what you want to do is, for the purpose of today, we're going to click on the first. Okay. So you can see right here, Fullerton SGD Cash Fund. You can see how it's doing, the performance, everything is really based on real-time data as well. You can see the historical returns and track it on a daily level too. So if you want to just adjust according to your customization. I emphasize this a lot because there's so much you can do on the app. And I think that's a great thing because you can access all these different tools for your own strategies. Okay, so you can adjust it accordingly. And then you can also navigate the tabs right here. So you go to comments. I love this because you can really connect with the other people in the community based on what they're saying, and also comment based on your thoughts, and also track the sentiments. You go to news, update it, according to real time as well, and you can filter accordingly based on the date that you're tracking. So this is really depending on the market revelations, right? The global events, what's happening in Singapore, and anything that's related to how the fund can be related to that. And then you can see also under announcements, right now there's no data there, but if there's anything in particular that the company would like you to know, it will always be reflected on these tabs right here. Next tab is on analysis. This is actually also one of my favorite ones after the community ones. This is more on the actual components of the fund. So you can look at the AUM, you can look at the risk indicators, and you can look at what is part of that asset class, right? So under AUM, for example, if you want to find out more information, they've got all these arrows on the right-hand side, which you can click and find out more from. So all these details are all there available for you, but you'll just have to navigate it on your own and maybe get more accustomed to this particular component. The last one would be perhaps something you'd like to know as well as a summary point for yourselves. Now, this is more of a macro overview of everything. You can see the fund documents here, the fund manager, the fund portfolio as well. So everything is here and it gets updated by the teams and also based on the data available. So let's say you want to go to fact sheet. Immediately, you've got it right here. So it's great. If you want to access any of these tools or if any more questions related to this, you can always drop the team a message or you can sound it out to the customer support and client services so that they can answer any of your inquiries related to that. But let's say you'd like to subscribe to it, okay? You go back to performance, the beginning tab, and you click on subscribe, all right? So right here, you can see which bank accounts you like to add, and you've got to put in the right amount for the minimum amount. It will show right here before you click on subscription. Very, very straightforward. Hope you enjoyed that. And if you have any more questions related to this, you can always go to our email pages and type in any questions. I'll share it later on. I'll promise you that we've got some really important emails that you can drop your questions to. But I think right now is the most exciting part of the live webinar. So can I invite Sam back into the room?
Yeah, you have me.
Hi, Sam. Welcome back.
Yep.
Okay, so I've got this component of the giveaway everyone's really excited about. Now, I'm going to ask the question to the audience and they're going to figure out how it works as well. But what we're going to do is I'm going to read the question on the count of 3. And Sam, you're going to answer the right question once we get enough winners. Okay?
All right, man.
Okay, so to everyone, if you would love to be a part of the giveaway, type in yes in the chat box right now if you're ready to do this challenge. Okay, great. So this is how it works. All right, everyone, you've got to answer the right question and you've got to do it fast with the right answer. Okay, so we'll reward the top people regarding the first question as soon as you get it right. Okay, I see a lot of people are ready. The team will get back to you if you walk away with something from us. Okay, question 1, everyone. In 3, 2, 1. Were there any negative months since 2009 for the Fullerton SGD Cash Fund? Is it no or is it yes? What is your answer, everyone? Remember, the top 5 people who get it right for this question and also with the right answer will walk away with something. Wow, you guys are quick. So what is the right answer, Sam?
There is no negative months or even weeks since 2009. So no investor
Yes.
will make a loss.
Exactly. And you shared that earlier as well. Now, if everyone wants to look at the replay of that, what Sam actually shared regarding the fund, you can always watch the replay later on. Okay. So, Sam, I've got some questions for you from the audience. The first question. So, what can we expect for the Fullerton SGD cash funds return in terms of increasing for 2024 or even just the second half of 2023?
Okay, I do not dare to give too long of a forecast. I think things nowadays are very fluid. FOMC members have no idea how they want to vote as well. So I probably will not give a over optimism kind of forecast in terms of yield. But I probably will say the next 6 months in the Singapore market, Sing dollar T-bills and deposits will remain fairly constant, will not experience a big jump. Uh, Investors should not expect something like 6%, nor they will probably expect a immediate halving of a 4% yield to probably say a 2% in the next 6 months. Very unlikely and remote for that to happen. 2024 will be a game changer. I think largely it depends on the economy. I think economy in terms of three particular pillars. One is jobs. One is the core inflation, where food prices and your probably your transport orders, etc., are being contained. They stop rising in terms of price. And the last most important one is based on the export and import activities of any nations. There is, if you are doing Sing dollar, of course, is Singapore. As long as these three are in check, we're ready for a softening of a rate cut. Probably Singapore don't cut rates. Open market depends on it. So I think probably the rates will regress from a 25 basis point on a monthly basis, still where it's palatable, probably near a good 2%. I think that would be my best guess for 2024. So far, I'm not an expert, but most of the time, all these analysis are not being plucked from the sky. Like I say, even central banker, they themselves don't know. Yeah, so I think that would be the most sensible guess, and investors should probably look at that direction.
Mm-hmm. Thank you. Next question. As we hear and see online as well, in terms of the analysis, most are pricing in recession or the possibility of it worsening in Q3 and 4 of 2023 or Q1 2024. Now, for Fullerton, what is your hedging method for this? And what would you say are the components that would affect us if we invest in this particular fund?
Okay, in this particular fund, there is no hedging required because they are all deposits and bills. They are already hedging your portfolio. We are a long-only fund house. We don't short the market. If one thinks that it's going to be a deep recession, the best move, of course, is to short the market, short the equity market, short the bond market, using a complex derivative to do so if you can. I think that is also a very dangerous path. I've seen so many hedge fund closing shop in the US. We are a bit more traditional. You don't lose money, but you don't make a lot of money. So I think that the best case is for this particular fund is already a hedge because your downs are truly protected. We are on deposits and bills. I do not see a potential for any underlying counterparty to unwind. They are carefully chosen. They are not probably say a Silicon Valley bank in the US where only they do business with one counterparty, which is a fintech startup. The banks in Singapore are greatly diversified. MAS has a regulatory view and very strong gut rails on all these banks in Singapore. They have to maintain a overnight cash, so they are safe. They are very safe in terms of the rating compared versus the regional banks, compared versus the developing market banks, or probably even say the banks, the developed world banks like the US. We are traditional. We are conservative in terms of choosing the counterparties, so they will be automatically hedged on your portfolio towards I think many investors concerned about recession. Yeah, so recession is actually good for the fund itself, but not for your other portfolio, probably I would say. Yeah.
You mentioned the recession point and people's sentiment towards that. So the next question is, other than that, what is that current sentiment in the Singapore market? And will the recovery, because we talked about resilience a lot and stability, but when all these other factors hit, would you say it will have fast growth for recovery? Or, what is that risk on mode to buy equity aggressively?
Okay, I think investor should not take it lightly, and also based on historical behavior of what the government will do, what central bank will do. If everyone can recall in 2020, month of March, April, and May, market dipped more than 20%. Equity, Singapore market as well, falling fast, very swiftly. Short period of time, 2 months, 3 months, fallen 20, 30%. They rebounded super fast as well. So I still can recall DBS was probably trading at $19 a share. It went back to 30, went to near to $40, and where we are today is about 30. So we will not experience a V-shaped recovery if there is a recession today. So it's very different, and investors should not take the experience of 2020. Firstly, the government will not print money. Singapore government will not do that. They will not inject another stimulus package. Although we know Lawrence Wong will be the next MAS chairman, will not see that kind of big stimulus being injected like before during COVID, because there's a once in a lifetime pandemic, and that involves people's livelihood, jobs, as well as people's life. So I think that there is a sense of that there's a pressure for the government to do so. But if we're talking about today, if there is a deep recession, I think it's a natural selection. Good companies survive. Lousy company are being acquired. If you're not good enough, you'll not even be acquired. So I think there's a natural selection of this. Investors should not expect a V-shape recovery. Very this one. Probably I will say is a long U-shape or a steady recovery from where they are. I think today terms is that borrowing rates I never seen before. Lousy company cannot survive because they can't borrow their way through. The banks won't give them quick money, easy money for them to recover and quickly hire back people, build back their strength. So I think this is a time for people to accumulate slow and steady, and do not all in. Do not all in all your chips. You always need some chips to make sure you're able to continue to grind. No government is going to help you, whether you're US, Europe, or probably Singapore. I think the government will not help you this round. We have to help ourselves. Yeah.
Really important point at the end there. So the next question, since you brought up the banks, for example, someone would like to know in terms of risk management, first of all, what is the outlook for the Singapore market in terms of the bank stocks for the near future, despite it declining, and then looking at the US side and the S&P side with the shares rising in value. How do we make sense of that relation, and how can we also use the fund perhaps to manage the risk?
Okay, I think that's a great question because the three Singapore banks also represent the financial health of Singapore as an economy. And they are also very heavy in terms of the STI allocation, more than 40%, three of the banks combined. The three of the banks in Singapore, I think they're strong compared versus a regional bank, but we cannot be complacent because I think there are more and more banks that are getting stronger in terms of balance sheet, in terms of reserve ratio, in terms of business model. I think Indonesia is a good example. So many of the banks are very strong compared to this before the Jokowi's regime.
Right.
I think we do expect competition. So I think as an investors, do not be lured because you're home buyers, you know the bank well, you see DBS setting branch giving out special rates on deposits, mortgages, or probably UOB running some promotion, or OCBC giving new clients a certain amount of welcome benefit. I think one should probably look beyond that, beyond Singapore Bank, and also look at the very regional banks as a diversification purpose. And also, I think in the West, developed worlds has also learned their big lesson after, FDIC have to come in and help the failed Silicon Valley Bank with their investors. So they also have learned the lesson, hopefully not at their own not their own expense of taking risks. They know that they need to diversify their pool of clients, different geography, different profession. So I think one, before investing into a bank stock, annual reports are free. You can look at that, what kind of business they are doing, how strong are their balance sheet, and also looking at who are the leaders, have faith in their leader. I mean, the CEO is a very important, critical role for us to look into. Look at his leadership as well as how the people are loyal, the loyalty of the employees to the company.
Yeah.
I think that speaks a lot, more than looking at the stock price itself. I think for Singapore stocks, do not look at the technical analysis. They don't really work. Look at a more fundamental approach where you cannot find on internet that freely. Make your analysis, and also I think that should be a good investment for years to come.
Thank you. So I'm picking two last questions for the Q&A. Thank you everyone so far for participating because your questions are great. So keep them coming and I'll see which I can prioritize for Sam. So the next question is, we hear of the bank run. How did Fullerton see that related to the Singapore situation? And if there is a liquidity squeeze, what is the day count for Fullerton in terms of needs to fulfill the redemption requirement?
Okay, good question. If I may post it over to just a quick moment, let me look at the slide number 6. Colleagues over the other side, if you can, you put it up. We'll probably will say about liquidity. The liquidity of the fund is the T+1. So any investors who want to redeem units from the fund, 1 day later you will get it. It's under the app. It's actually quite fast. I tried it myself. Back to your bank account, less than 2 days, you'll probably see it in your bank account. We have not gated. So what is gating? Gating is that shall there be a very big redemption, fund manager has the ability to stop that redemption. So I say I can't fulfill it. So that's a duty of a fund manager. Somebody want to try to be funny. I place in 1 billion and redeem tomorrow. That's more than 25% of the fund. We can actually gate it. But I think today size has already reached a very diversified pool of clients. The fund is 2.8 billion today, very huge. It comprises of institutional investors like universities, hospitals, state boards, individual, me and you, mom and pop, the average Singaporean. We all have different time for us to make withdrawal. So I don't think at any one point we'll experience a huge outflow in terms of redemption, nor the other way. We do not expect institution to place a trade. They don't give you advance notice, they just place it. Unlikely for that to happen. I think it will remain stable, and as an investors of the fund, unit holders of the fund manager will be treating you fairly like any investors out there, whether you're an institution, whether you invest 100 million or probably $100, same treatment. You will still get it, will not gate the fund at all.
Mm-hmm. Is there anything in particular for this particular slide 6 that you'd like to bring the audience attention to? Because I think there are more questions related to this.
Okay, so just now, I think investors actually asked about the liquidity. I think I want to share is on the bottom right-hand side about the guidelines. This is a professional term we call guidelines, but in the very layman terms, I call them the guardrails. So I think these are important. These are being in prospectus. The fund is managed by human, and human has an emotion. So we want to make sure all these are taken away, the emotion are taken away. These are guardrails. Guidelines like we cannot invest a minimum counterparty more than 20%. For F2, what is F2? F2 is a credit rating issued for short-term counterparty risk. So Fitch rates it, Moody's rates it, Standard & Poor's rates it. So let's say there is a new player in Singapore that requires a new bank in Singapore that requires quick funding. They say, I'm going to give you 10% Fullerton for your deposits. We can't buy them because first of all, they look attractive. They're strong, they're not rated. So all this guardrails. It actually ring fence fund managers from be overly emotional and also be affected by very high returns. So these are guardrails and important for them to manage their portfolio in the interest of unit holders.
Mhm. Thank you for
Yeah.
that. Okay, so the next question would then be, in the face of the rising rates environment for US side, what would you say is the room to grow, potentially for the Fullerton Fund in terms of returns in the coming months? I know we cannot foresee anything related to this, but I think maybe we can summarize a particular outlook or potentials that we can look at, and how high can it go? I mean, I don't know what the limits are related to this. Perhaps you could give us some insights.
Okay, first of all, I think the fund don't have a limit to the yield, but bounded by guidelines. So as long as we're fulfilling the guidelines, we are able to attain the highest possible yield. That's still all within the guidelines. So we still need the T-bills. We still need the Singapore government to continue to issue T-bills. We can buy the T-bills. If it's being issued at the 6 months T-bill is at 450, I can't tell you my fund is at 350 in terms of yield. It probably goes very close to where the 6 months T-bills are trading. That's a fair point. Our moving average is around 45 to probably say a good 50 days. So that will give you a sign of where the yield curve should be in terms of return expectation. It will be probably closer to the US interest rate than the rest of the other currency in the Singapore near basket. So it will not be something like a Japanese yen kind of return, but it's a very balanced approach. So I think the return expectation in short 6 months, I see no investor should be making less than what they should be doing on a common time deposit versus the banks. So you still be better off. Yeah.
Mm. Thank you for that. Okay, we just got a last question that came in. Since you brought up Indonesia a few times in this, what would you say then? Because we talked about competition as well, right? But they want to know, related to the fund, is there any exposure to anything related to Indonesia within the Fullerton Fund side of things?
No, we the fund doesn't invest in companies in Indonesia or counterparty in Indonesia. We don't. But if you want to pull somebody from ASEAN, which better potential, probably that's one of the markets because of a very young population. But
Right.
are they doing the business we're doing here? Definitely no, because we are still a financial hub. We don't export stuff. We don't export your commodities. So I think the fund is strict in terms of where they can invest into. Even there is an American bank in US that needs Sing dollar. Can we place deposit with them? They can't. They have to be in Singapore to have a Singapore office, right? So I think the fund are carefully tailored for very conservative investors. We can't do regular stuff. Even they offer the best terms, we can't do the regular stuff.
Thank you for that. And just a last extender, because I do think it's very important for today's topic. And to wrap up, before we do the final giveaway and final takeaway, thank you everyone out there. So do you think MAS, or at least what is the outlook or perspective for this in MAS actually further tightening its Singapore dollar NER band, given that the Singapore's exports are not faring so well? Like, what are your insights on this?
I don't have an insight. So does any Singaporean or this analyst across the world. There's only 2 times you can look into it. Adjusting the band, one in April, one is in October. Only
Yeah.
few person that are involved. It's a very small team that decide how the near band goes. But in terms of today's, I can see the day-to-day life, common Singaporean, probably the average Singaporean family are struggling to keep up with the rising cost of electric tariffs at home, the bills they're paying. They're going expensive. I think the hawker fare are going expensive. All these are considerable factors for the NEE band to at least behave very constant, at least parallel, but not on the declining trend. So if they do that, we don't have an interest rate instrument to push it higher. They have to adjust using FX. So I think this has to be on a gradual appreciation band or widening of the upper band to make sure the Sing dollar stay competitive to combat inflation. So this is the only tool that I think the MAS are using in today's term to fight inflation. They can't just push it down because they just want to do the export business. So they have to be a very fair statement to the average Singaporean, not the high net worth for sure. They're not trying to make the high net worth richer. Their aim is to make sure the average Singaporean are able to cope with inflation. So I think that band will be gradual, or if not trading at a higher band. Adjusting the slope of the band, I think unlikely at this point. You can't be that strong. If your currency go overly strong, nobody want to do business with you.
Thank you,
Yeah.
Sam, for clarifying that. I think it's also very timely that we talked about Singapore as well as we gear up towards our National Day happening next month. So I think that was a good question to end off with, doing it for the people in Singapore and residents here. So a very, very good summary of that and clarification, Sam. Thank you. So let's go into our final giveaway for today, everyone, for rewarding you for being here with us. So I'll keep Sam on here, but you know the drill. The fastest fingers first, get it right. We will reward you with this on my count of 3. So are you ready for question 2? Sam, are you ready? Okay. The question is in 3, 2, 1. Fullerton SGD Cash Fund can use synthetic or alternative money market instruments like options and commercial papers. A, yes, or B, no. What is your answer? Type in your correct answer in the chat box in app. Okay, I'm just going to give a few more people a chance, even though I think we do have our winners because you guys are really, really fast. Okay, excellent. Looks like we have our winners. Now, Sam, what is the correct answer?
The answer is no.
And the answer is no. So if you answered yes, you got it wrong, unfortunately. So congratulations to our winners for that last giveaway for today. That was Sam Ye, everyone from Fullerton Fund Management. Now, Sam, just to wrap up, beyond the actual product we were talking about, or even the topic of today, what is that last takeaway you have for our active investors going into, the future market uncertainty?
I probably will say cash is king. Enjoy while it lasts. Yeah. Thank you.
Enjoy while it lasts, everyone. Thank you so much, Sam. I'll see you for our next show together.
Okay. Thank you, Olivia, and having me here.
Thank you, everyone. So to the audience, keep those questions coming. But if you want to watch the replay of what Sam was sharing just now, you can watch it right here if you scan the QR code to gain access to any other topic discussions related to funds, and also anything, any revelations that happen within this page. So follow it and you can keep track of it. Now, if you have any more questions, you can drop us the email here. I promised you guys these 2 emails. If it's product related, trading related, or anything related to collaborations within the space, you can drop us an email and the team takes it very seriously. They will track it and make sure that they get back to you as soon as they can. Now, we can't wait for the upcoming shows we're going to share with you. We craft and create everything based on your needs. So if you want to watch more shows like, how we had that with Sam today, you can keep track of it right here on our social media page. We've got so much content for you. So really, I think you should go check it out right here, scan the QR code, and you have access for free, everything for you in terms of education. Okay. So join this right now and make sure that you follow the pages. And if you're based in Singapore or coming to Singapore and would love to attend our flagship event for the year, so exciting for the second half of the year. We've got MooFest 2023. And so these online shows, we're just gearing up for this big offline event happening very, very soon. So if you want to find out more on the lineup of speakers, what we have on our main stage, we've got so much content for you, and also access to great experts for the show. If you want to sign up for this MooFest 2023, you can do so right here. Scan the QR code. All right. It was a pleasure having everyone with us. I hope you have a great weekend, and we'll see you for our next show. Signing off, I'm Olivia Higgins. Oh, hi. All is good. Okay. Perfect. Thank you, Sam. Are you there?
Oh yeah. Hi, hi. I'm here. Okay.
Okay.
Thank you.
Thank you, Sam, for that. And we'll see you for the next one. We got so many questions for you. And thank you. I had to ask that last question only because the user kept typing it in. So
Okay.
I gave it to them.
Okay. Good,
Initially,
good.
I did not want to ask that MAS question, but I think it was a good way to clarify some misconceptions people have. So yeah, that was good.
Okay.
We'll
Thank
share
you,
more
everyone.
information with you later on. But have a good weekend, Sam. Hope
Have
to
a
see
good
you
weekend. I
again
see you
day.
next week. Yeah.
Yeah,
Bye bye.
Sam. Yeah, so Camille, sorry, I was just waiting for Sam to leave. Yeah, I know there were a lot of things, tech issues and all that, and my phone suddenly went off. But all is good. I think if there's anything, we'll just fix it in post. But there's nothing super serious that we have to fix that I picked up. I know. Oh, you guys handled it so well. Thank you so much for everything. Yeah. Oh my gosh, Nana, I finally hear your voice. Nice to meet you. Like true voice. And hopefully I get to right. No, it's full of stress, life. I think it takes time to warm up, but I think it was pretty smooth. I think it's just here and there, but I think as your first time, I think you did pretty well. Yeah, it was awesome. Sure. I think he doesn't know, so I we shouldn't really pick it up unless he brings it up. Okay. Unless he says, "Oh, what was going on?" No, I think he's okay with it. I think he loves our team as well. But I will thank him anyway. I will thank him. I'll see him next week in person. But yeah, thank you guys. The life usually the stress is normal. I think it's a good thing, because it's full of adrenaline. It's actually very exciting. But I think going forward, just yeah, we'll just make sure we take the notes and we'll work on the improvements. But good job, everyone. Thank you so much. Yes, always. We always do better and better. But awesome, Nada. Thank you so much. Guys, have a good weekend. Bye.